What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. Now, I want to talk to you real quick about trading the U.S. indexes, all right? Now, the U.S. 30, for example, right? This is a U.S. market. It's made up of companies like Walmart, Walgreens, NVIDIA, Nike, Microsoft, etc. Okay? Stocks. So for this reason, the U.S. indexes really come to life at that 9:30 New York time equity hour open, okay? The New York Stock Exchange open. And of course, we know that there are three main sessions every day. Okay, we have the Tokyo session or the Asian session, we have the London session, and the New York session. All right, in that order. New York is actually the last session of the day, even though for me, when I wake up in the morning, New York is just now opening. All right, the day really starts with Tokyo. Okay, and since I live in the United States, when the new day starts, for example, when a new week starts, my charts actually start moving on Sunday evening because that is when the Tokyo session begins, right? So by the time we come to the New York session, basically all of the cards are on the table already. And this market's really going to come alive in New York. And a lot of the times, there won't be a lot of volume or a lot of movement in these markets during the Asian session and the London session, okay? Sometimes there is. Sometimes the trade may start in the London session, but it's not that common, all right? Now, there's certain behaviors that this market often exhibits that you can learn to recognize. And this is really focused on that type of trading that's in and out, okay? You should only be in the market for 15 minutes or so every single day and get what you need to get done, okay? So a 3-session setup is a setup on the day that trades from the low of the day to the high of the day or from the high of the day to the low of the day. But there are some typical behaviors that you can learn to recognize on these markets, specifically the DJ30, right? The Dirty 30. Oftentimes, just before that 9:30 open, and when I say just before, I mean like the 3 or 4 minutes prior to 9:30, all right, we will get a spike in price in one direction or the other, all right? In this case, I've drawn on the chart here, you can see we get this little spike to the downside right as New York opens at 9:30, right? Just as we're going into that 9:30 hour, we spike down and take out these lows right here on the day and put in this new low, okay? Some people call this a liquidity sweep or, whatever they might call it. But it's a spike in one direction, almost like a fake out, right? And then the price will immediately reverse and start trading in the opposite direction, oftentimes with a lot of inertia behind it, okay? So that's pretty typical of a day that's going to give us a long trade opportunity. Price will spike down, take out the lows, and then reverse. And in the opposite case, all right, we might have a market that, trades. Asia gives us a low and a high. London gives us a high and a low, right? And then going into that New York 9:30, we'll get this price spike up. We'll take out those highs, and then the market will reverse and drop with a lot of momentum straight down to a new low of the day level, often coinciding with a key level from yesterday or the previous day, so on and so forth, right? And these templates that I'm showing you right here will show up. You will see them over and over and over again, okay? We had 3 of these types of setups this week alone: Monday, Tuesday, and again today on Thursday. All right. 3 times did we have a setup like this: low volume going into the session, a spike up to the highs, and then a short trade. When you get into a short trade like this and you're sizing in appropriately, you're done in anywhere from like literally some days I'm done in 2 minutes. All I need is 2 minutes to grab my 2% and get out, right? But you take this trade, you're done in 15 minutes. You shut your charts down and be happy with what you got. Take the money off the table, because very oftentimes like it's going to drop straight down. When that move ends, a lot of the times it's done. It's going to just chop around until the close. And this is where traders FOMO into things, and this is where you give back your profits. Okay, here's your easy, stress-free, don't even have to think about it trade. And then right here you're trying some like brain surgery type of shit on the charts, and it usually doesn't end up working out that well. Sometimes you will get lucky and hit after that initial trading opportunity, or some days there will be, other opportunities to get in later on in the day. But I don't like to do that. I need to stick to my rules, right? So these are the types of things to look for. And when you hit this and you take that money off, I'm telling you that I do this all of the time, bro. I take trades like this. When I take that first trade, it's over within 5 to 15 minutes. I've got my 2%. I am not getting back in this market. I'm going to say, okay, thanks a lot. It was a pleasure doing business with you. I'll see you tomorrow. You know what I'm saying? Because a lot of the times when I shut that trade down and then I come back and look at the market, it's exactly like this. I got out right around there. It barely went past where I got out, and then it just starts chopping around. All right. And even if it did just keep going and drop for 1,000 pips, I don't really care, because I stuck to my process. I stuck to my strategy. I took my trade. I locked in my profits, and I walked away. Job well done. Pat myself on the back, toot my horn, all that good shit, right? Anyway, man, until next time, I hope you continue to free your mind.